All right, traders, let's jump into some training for today. I get a lot of questions on chart setups and so forth. So what I want to do today is show you how I set up my charts, not that you have to set them up this way. And there's a lot of spaghetti and colors on here. So I want to clarify what you're looking at and what I'm looking at on charts. Now I'm going to preface this whole thing by saying there's a lot of stuff to look at, and I don't know that it means a whole lot of anything. Technical analysis, I think, can help a little bit in making some decisions and maybe keeping you out of some trades that maybe you shouldn't get into. I don't know that it gives you a giant edge in your trading. I don't think just strictly following technical analysis and putting on trades necessarily makes you a ton. Now, some people do very, very well trading based on technical analysis and different time frames and maybe day trading and so forth, and they got their own little tools. And then some people don't do well. And I think 90% of all traders fail. And there's a lot of reasons for it. I'm not going to blame it on technical analysis, but I don't know that technical analysis does a whole lot for you. In reality, stocks have a 50-50 chance of going up or down every single day. What technical analysis typically does is tells you where the stock has been, but not necessarily where it's going. You can infer potentially where it's going with technical analysis. So it gives you an idea that maybe it's going to continue going in a certain direction. Now, when you pair that with the fact that I am a premium seller or a theta trader, and that's how I like to operate, I think what technical analysis does for me, it gives me an idea as to whether my probabilities are good or not. Now, I typically will see, with the way I trade, maybe a 90% win rate, because I have a lot of farther DTE, and I do have some farther out of the money deltas that I trade. So for me, I like to trade 90 DTE on most of what I do, and I like low delta. I also like trading futures more than I like trading stocks. I really don't like stocks a whole lot because all it takes is for some knucklehead to say something and tank the stock. All it takes is for one earnings report to be good, but somebody says something on a conference call that's not, and it tanks the stock. So technical analysis is all great, but when it comes down to it, any stock at any given time can get hammered, and it can get hammered for this, in my opinion, the silliest of reasons, because somebody says something and the stock cranks up, moves down. Maybe NVIDIA says AI is driving the future and it rockets up, but then AMD rockets up as well because NVIDIA rocketed up. Yeah, they're in the same industry, but they're not the same company. They may not be doing the exact same thing. Now, all of a sudden, I've got a stock rocketing up because somebody else said something about some other stock. Technical analysis does you no good in those areas. However, let's stick to the charts that I'm using here and why I use them, how I use them to help improve the odds of what I do. And I'm very much a trader based upon probabilities and strategies and not willy-nilly. So let's look at how my charts are set up. And I'm going to start with just the layout of what I'm using here in Thinkorswim, which is where I like to do charting. Tasty Trade does not have good charting built in. It's a very sad charting package that you get with it. But I also know that Tasty Trade believes more in probabilities than they do in charting. I know Tom Sosnoff and Tony Batista just don't really believe in using TA, and that's totally fine. It doesn't make them right or wrong. And so they build a platform that really doesn't have fantastic features. It's okay on that side. And you have TradeStation, you have other things that are out there. I'm going to talk about Thinkorswim and the settings that I'm using. I like to look at two settings at a time. So on this left-hand side, and I'm using a flexible grid here. On the left-hand side of my flexible grid, I'm going to shrink this so maybe we can see a little bit bigger. I've got a weekly chart posted. On the right-hand side, I have a daily chart posted. On the weekly side, I'm doing a 2-year look back. On the daily side, I'm doing a 6-month look back. Doesn't mean you can't change those settings. That's what I prefer. And then usually I'll shrink this down to be something a little bit easier to view when I'm going through there. This stock ran up. Oh, this is SPY, but this stock ran up, or SPY ran up here. And this was the high, and then all this stuff happened since the high. So really what's happened before that, not super important. So I can kind of cut that out of my chart. For the daily, some of those previous stuff might be a little bit easier to, to look at here, but I use the daily on a much bigger size. It's not like a 1/3, 2/3 size, but it's kind of along those particular lines. So that's how I like to set it up with weekly and dailies, because I like to look at the longer time frame and the shorter time frame at the same time, as opposed to bouncing back and forth on it. All right, so let's take a look at some of the other things that are on here. So I like moving averages, and on here I'm going to have 3 moving averages that are key for me. And I'm going to kind of use this weekly side. There's a lot less spaghetti on here and colors to look at. But the first moving average you're going to see is this bright green one that's on both. This is the 21 exponential moving average. So I like the 21 EMA. Most stocks that are in a trend have a tendency to come down, bounce, and move off of that. So the 21 EMA gives me a good sense of where things are going when they're in a trend. And if they come back and bounce off it, like you saw SPY did here, bounced off it, moved higher. Okay, now it's getting farther and farther from the 21. It's getting more and more overdone, in my opinion. Same thing when you're, on the downside, you're coming up and hitting it, dropping off, coming up and getting close to hitting it, dropping off, coming up. You broke it a little bit and then failed. So it serves as a good spot for pullbacks on things. If I look at the daily chart, look at the 21 EMA here on SPY. Once we broke through it here, came down, bounced, rode it up, bounced, rode it up, bounced, rode it up, bounced, rode it up. So it serves as a good spot to enter trades that are in a trend. The next one that you'll see here is this reddish moving average, and this is the 50 EMA, not simple moving average, but this is the 50 EMA that I'm using. And I do make these a little thicker on my charts. It's just easier for me to see. The 50 gives me a good sense of the trend that we're in. When it's moving up, especially on the weekly, we're in an uptrend. When it's moving down, we're typically in a downtrend. Until it's broken one way or the other, the trend remains in place. I'm not using it as a spot where we come down and bounce off. However, as you can see on the daily here, we've bounced off it, we've bounced off it, we've bounced off it, and now we haven't come close to it since the middle of May. So we're in a strong uptrend. We're above it. You're above the 50 EMA. You're in a pretty good uptrend, at least on a shorter term basis. And then the yellow down here is the 200. And I also use an EMA on the 200. So this gives me, again, a good sense of some support and direction. You can see that we've just been in, but flattening this uptrend, and we continue to stay in it, even though we've had this pullback. We came down, bounced off of it. So it can act as a support level here on the weekly. And then on the daily, again, it's giving me some direction. It's been flat, flat, flat all the way through here, all the way till about here. And then we started to make a little bit of a move higher. So again, no direction on it. A good, when this thing is flat, okay, whether we're up, we're down, we're up, we're down, I'm not looking for anything to do anything with it. It's just been flat. Good time to do strangles, but you're not in a trend. All of a sudden now it's curving up, and now we're in a trend. So it gives me a sense of what the trend is in the stock. So those are my 3. And I also look to see, are they stacked on top of each other? You have the 200, the 50, and the 21. boom, boom, boom. As soon as those things stack, like they did right about here, okay, that's a pretty good bullish bet. Some can be support or resistance, but when they're stacked, things are moving in a singular direction. All right, so there's my moving averages. Next thing I want to touch base with that's on here is going to be these white dots. And what the white dots are that you see here is a technical indicator called the PSAR. And what the PSAR does, it gives you an idea of whether things are moving, in a bearish or a bullish trend, and where that trend can change. So it's called the parabolic SAR indicator. And essentially what the parabolic SAR is it's a really good indicator for identifying direction of price trend, and then again, potential entry or exit points, or places that you could set stops before something reverses. And I'm using these particular inputs so you can see the 0.02 on the acceleration and the 0.2 acceleration limit on those on the PSAR. So these white dots are telling you right now we're moving up, 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 up. The farther away you get from the dots, the stronger that trend is. As the trend starts to fade a bit, you start to get closer to the dot. As soon as you touch the dot, you typically will see a reversal. So you can see here on the weekly, we reversed here by touching the bearish trend dot. You can see as soon as we reversed, you get this little green arrow, which is telling me that the PSAR reversed right here on November 14th. You've been in a solid, trend until right around here, and then you can see that we came down and touched it, and then the next day we were above it. So we reversed. Okay, now you have a little bit of a bearish trend. We came up, touched it. As soon as we touch it, we reverse to a bullish trend. So it gives you an idea of how far are you from that trend potentially reversing. I like to look at a stock that just moved into a PSAR signal within the last couple sessions, meaning a potentially new trend is underway. The closer these dots get to the actual underlying, the closer you're getting to a reversal. So here on the daily, we reversed here on 517 when we hit the dot on the, to the upside, the bearish dots. We hit those with our candle, which reversed us to a bullish trend. We stayed in this bullish, and now we got really close in here. Okay, and the dots were tight together. So when the dots are tight, okay, the trend is not as strong. When the dots get farther apart, that trend is pretty strong because it's moving quickly away. We came down, but we didn't touch it. So we stayed in the bullish trend, and we went all the way up. You can't use all these indicators by themselves necessarily, but had you just gone long when PSAR triggered bullish and exited when it was bearish, you'd have made money there. Now here, it triggered bearish, but by the time it came down and triggered bullish, pretty much just a flat trade. But it was direct, initially, the initial move was away. As soon as we moved into a new trend here, we've been in a PSAR bullish trend now, and we are a pretty decent amount away on SPY. So until we come down to about the 444 level or 44.40 on SPX, and until we drop another 100 points on SPX or 10 points on SPY, we won't see a reversal at this point. Now these dots will continue to get higher, so we'll continue to get closer to it. It's a good trend indicator and a good reversal indicator, and I like playing reversals as a premium seller. All right, a couple more things we'll see on the upper part of the chart. Obviously, we have volume in here. I don't always use volume, but I've started using it a little bit more. You can see on the weekly that the volume that's on this chart on the weekly has only been going down as the market's been moving up. Now, the market's still moving up as a whole. So just because it's moving down doesn't mean get in or get out. But if volume is dropping, it's a sign that potentially the move is getting weaker. If we look over here on the daily, same type of a thing. It's been pretty flat all through this. But then here's what the volume's been doing for a while now. Now, again, it was sideways, broke out higher, starting to tip over. Volume on the up move is getting weaker. And if volume on this up move, is getting weaker, and you can look at any time frames that you want. If volume's dropping, okay, then maybe that move is getting close to being tired and overdone. So I've got volume there to tell me whether we have a strong move or not. All right, a couple more things that are on here. You will notice in gray, I have the Bollinger Bands, and I'm using a 21, not a 20 length, with the 2 standard deviation up and down on it, but I am using the 21. And why do I use the 21 on there? Because I love the 21 moving average. Even though this is an exponential, it's still almost the center, and it really acts as the center of the Bollinger Bands. You can see when they get tight, you're squeezing in. Okay, you're consolidating. When they start to open up, now you're in a trending move one way or the other. Here they got tight, they stayed tight, and then as soon as they started to open up, this move started to really happen, and you can see us just popping up and bumping against the top edge of the Bollinger Band until it started to get tight again, and we got really tight in here. Well, so this is a great thing to take a look at when you're looking at SPY. These Bollinger Bands got pretty tight right here, and you were in this consolidation flag pattern. Maybe you want to look at it as if it was a bull flag, a big one, but a bull flag here with some support and resistance. As soon as it broke out on a tight Bollinger Band, it popped up and made a really strong run. So it can give you a lot of indications as to whether, I think Bollinger Bands just tells you whether you're in a period of expansion or contraction. And right now we've been expanding, and now let's see what happens. If we get above it, we typically pull back in it. So we typically will ride and stay inside the Bollinger Bands. So as long as you're staying inside of that range, which is where most of the activity happens. And you can see most of the moves are going to be contained inside those Bollinger Bands. So it gives you a sense of how many, how often we're going to stay in here, or how much time we'll spend inside and contain the move. When they get wider, we're making a pretty big move. When they get narrower, we're in consolidation. Okay, the last thing that's on here is this red and yellowish. And this, to me, this is the Keltner channel with a factor of 3 on here. So I'm looking at a 3 average true range using a length of 21. I'm looking at a 3 ATR move. Okay, so this is a 3 deviation move on the Keltner channel. And this is used for me to tell whether we are overbought or oversold. I can use it in conjunction with the Bollinger Bands as well. But you can see up here, more recently, we are exceeding the 3 average true range on this Keltner channel. Okay, that is as overdone as you can get, either to the upside or the downside. So maybe we've reversed the last couple of days. We're back inside of that Keltner channel, and maybe we'll revert maybe closer to the mean, which is the 21. So it's all revolving around that 21. It gives you a sense of where can we pull back when we get extended, like got extended here, pulled back to the 21. Started to move up, got extended. Will we pull back to the 21? Maybe. Again, that's going to be closer to the 445, 444, which is where that PSAR reversal is. So all of that stuff's kind of coming together here a bit. All right, so there's the upper part of the chart. Now, I use 2 or 3 technical indicators below. First one here is my favorite, which is MACD, and the standard 12-26-9 exponential on the MACD. I'm using both the MACD line, the 0 line, and the histogram. It's just really visual to me. You don't necessarily need the histogram. You can see whether the MACD and its average are getting farther apart or closer together. I think it's just a great visual representation when that happens. So how am I using this? Number one, if I want to, I'm looking for reversals. The bright green means we are in a stronger momentum up move. As soon as it changes to the dark green, then it means that momentum is starting to come out. Doesn't mean the move's over, but it means momentum could be coming out of that move. You can see here, we ran strong. As soon as we broke through the zero line and went from red to green, which I'll talk about in a minute, okay, there's a pretty nice run, and then it just started to run out of gas. Kept going higher a little bit, okay? But as you started to run out of gas, it started to pull back, and you had a PSR reversal signal in there at the same time. So I'm running out of gas, but we're still moving. But PSR reversed while I was running out of gas. Okay, it's a good time to maybe put on a little bit of a short trade. Okay, Bollinger Bands also were starting to curl in. Okay, all those things kind of added up to a specific move. Okay, bright red when we go negative. Okay, meaning that the indicator line is now below the average and that the momentum is down. Then dark red means the momentum is changing again. It's best to use these in a trending market, not a flat sideways market. So I want to see something trending like this, where we move from maybe red to green right here. PSAR is already telling you we're green, and we got a MACD positive move here. However, you were already a little bit overbought, but we still, could be in this trade. Nothing's telling us to stop until we get to about here, when MACD starts to get tired, and then PSAR reversed slightly thereafter, and we had a nice little pullback. All right. Typically, too, if you're going to move in one direction, you want the lines, the MACD line and its average, above or below the line. If I want to get bullish, I want to do it, in my opinion, I want to do it as these are crossing from negative to positive. So I'm looking for the actual MACD line, the green here. When it crosses the zero from below, that's a pretty good indicator that might be a good time to get in. Not always. And then as long as we're up here, not necessarily any time to get, to get short or anything at this point in time. We're still above the line until we start to curl down and maybe start to make that move. Then, we'll see if we get short. And the last thing down here would also be the RSI. And I used the 10 period, which is 2 weeks, two sessions, 10-day trading session. So some may use 7, 14, whatever you want. I just happen to be using the 10. And this tells me, again, overbought, oversold, and I'm using the 30 and 70 as my lines. When we get above, like we are in a weekly, when we get above the 70, we're getting overbought. Doesn't mean we can't stay there for a while. MACD is overbought. Everything's overbought, but we're still moving. PSAR is still bullish. No reason to change our direction just because we're overbought. However, if we start to dip below that line, and again, all of these things converged right here on 6/16. You had a PSAR reversal signal. You had RSI starting to fall already. You had MACD reversing. Those are all pretty good signs that, okay, maybe I could take a short trade for a while and give myself the best opportunity to be successful. Yeah. The other thing you can look at RSI is I'm looking for divergences. So here's a high that we made back here on 6/15. Here's the next high we made on 7/19, but RSI was lower here than it was back here, which means it's not as strong of a move, which means it could potentially look to reverse soon. So as soon as you start to get those divergences in the RSI. So there's the basic charts I look at if I'm looking at any types of stocks as well, which I really am not a big fan of stock, but same types of things. I may look at those. I'll look at my moving averages, and then you'll see also I'll use kind of this, I don't know, pink line for uptrends, and I'll use blue for support or resistance lines, just to deviate, trend line, support and resistance lines that we have on some. So if I'm looking at Amazon here, you can see Amazon, while it was moving up here, RSI was not moving higher. So it set a high here when we made that high, and then RSI has just been lower ever since that move. So doesn't mean sell or do any of that, but it means, okay, we might be running out of momentum. What's MACD telling us? Momentum is down. Okay, we've been in this sideways consolidation, nothing here. MACD popped up, down, but I wouldn't do anything because I'm not getting short necessarily until I start to see this start to move lower on the MACD, the actual signal lines. But I'm looking up here. We are really close to tagging that PSAR bullish dot. We actually came down, almost touched it on the day. If we hit this dot, we're going to reverse and get a bearish PSAR signal. Now we start to take a look. We've already hit the 21 EMA. That's where we're holding on Amazon. That's typically a spot where we could bounce and move higher. Okay, if we do, then we remain in this trend. But look at that volume; it's just not there to continue any kind of a move. But even this down move is not on strong volume the last 2 days. So volume's telling me, yeah, we're selling off, but it's not the same as it was on some of these days back here. It's kind of lower volume. I don't have an average volume running, but you can do that as well. We did not break the 3 ATR, so we still have some upside opportunity here. Bollinger Bands are getting tight, so again, it's another period of consolidation before maybe breaking higher on Amazon. All right, I'm going to take a look at a few more quick things on charts, and then I'll wrap it up for you guys. I also am a big fan of Squeeze. So I use the Squeeze Pro indicator here. I'm going to get out of the flexible grid. I'm just going to go to a longer daily, and this one's going to give me a 6 month, but I could go 1 year as well. So it's a little bit bigger, space to run and, give me an overall look of where things are. But really all the action's been in this area. So that's where I'll zoom in on the trade. MACD just been tight and not doing much up or down, so it's really not giving me any indication and of anything right now. When we're in a trend here, maybe that trend is starting to get tired. Okay, that's all I'm looking for. But the squeeze is also telling me right here as we move from the green is the squeeze. We're firing a bullish move. Typically, I'm going to look for 8 dots or so before the moves typically start to wilt as a whole. Red is when we're actually in a squeeze. That's a really tight Bollinger Band, Keltner channel area in the squeeze. When we start to launch out of that squeeze, okay, here, then we start to get these green dots and the light blue. As soon as the dark blue starts to come in, momentum's coming out. This tells me, all right, momentum's coming out. Do I get short? Maybe. Maybe not. But you had a PSAR reversal here, but you're still in a pretty solid uptrend above the moving averages. So you can also see on here, I have an 8 moving average. Probably remove that so we don't get anything confused. A little cleaner chart just to watch what's going on. We stayed above the 21. I would not be looking to short Amazon here. It's just the momentum is coming out. I also love the stochastic momentum index. I think it's a fantastic short-term trading tool. When it is overbought and crossing below, could be a reason to get out. But I'm waiting for extremes. Extreme overbought, okay, or extreme oversold below the lines, to give me an idea of, maybe a good opportunity. I just use them all in conjunction. You can do what you want. I just want you to know what you're looking at when I share my different indicators and charts here. But you can see, even though the momentum was coming out, you really weren't having, getting super negative on the stochastic momentum here. It's just been in this uptrend. I'm just waiting for it to come back and tag the 21, which it did while in this overall uptrend. that we're in. If we're in an uptrend and the indexes are stacked, or the moving averages are stacked, you've got the 21 above probably the 50, and then the 200 down here. Don't have the 50 turned on. I don't know if I even have it on this particular chart. I do not. But we're in a solid uptrend until we break the 21. Now, this potentially is a trigger here that maybe we should get short or could get short, but we're remaining in this overall uptrend. I'm not going to get short yet. I don't need to be in on day one. I can be in later on. If we're going to hit PSR reversal, maybe tomorrow, we might be breaking the 21. I'm going to watch to see on the next day's candle on Monday, considering today's Friday. Do we bounce and move higher, or do we continue to sell down here? Now I'm looking at the next support level. Could be the Bollinger Band, could be the uptrend, could be the 50 EMA. Any of those things might be the next support, as we are still in an overall uptrend until proven otherwise. All right, so there's an idea of how I set up my charts, what I'm using. I love the flexible grid. I love looking at some of the charts here through this lens, and that's what I'm sharing with you guys out there on a daily basis as I cycle through charts. Tesla is the one selling off the most. Was this a move that you could have gotten into? Well, you were above the Bollinger Band here. Okay, now you can start to see that on this selling, volume has picked up. So that's a pretty significant point, that volume's picked up. You now have a bearish PSR reversal. This is not necessarily a bullish area yet, until maybe we break back above some of these highs. I will wait to see if RSI gets oversold, if MACD gets oversold, and they start to both turn at the same time, and we find some kind of a support area in here. If I'm drawing supports, I will look at, previous pivot areas where we may have bounced or done something, and those would be areas that I will draw on just to get myself some idea of areas to look for a particular bounce. Or if I, being a premium seller, if I'm going to place a put trade, I want to be below some of these support levels as we're out there. So I want to be below support levels, and I want to be watching these trend lines to see where could I potentially be placing a trade. Like 3 on these trends. Where can I place a trade? Is it overextended? Okay, absolutely. Now it's not overextended. Is this a good spot to maybe jump into Tesla? Maybe. We'll see if some of these areas in here hold. All right. Enjoy a fantastic rest of your day. I hope this was helpful and beneficial to you. Good luck trading. Take care, everybody.